Hello, welcome to the Community Lending Program Overview webinar. My name is Julie Francis, and I am the Program Manager for the Community Lending Program, or CLP for short. This is a recorded webinar for member financial institutions of the Federal Home Loan Bank of Pittsburgh. I'm joined by my colleagues, Fred Duncan, Senior Manager of Business Development, and Alexa Mascara, Community Products Manager. This webinar will provide an overview of the Community Lending Program, how CLP can benefit your institution, what type of lending activity is eligible for CLP, and how to apply for the program and access CLP funds. Because this webinar is recorded, we hope you will come back to use this as a resource when you are ready to submit your CLP application. Before we discuss CLP, I wanted to take a moment to review the community dividends available to members. Some are mandated by statute, and some are voluntary, approved by our board of directors. As members of FHL Bank Pittsburgh, you have access to these products. On the left-hand side, the first program I'd like to mention is our affordable housing program. FHL Bank is required by statute to contribute 10% of its net income annually to its affordable housing program, or AHP. AHP provides grants for affordable housing development. First Front Door is a set-aside program of our AHP that can help qualified first-time homebuyers with down payment assistance and closing costs. The Community Lending Program, which we will discuss in depth today, provides low-cost advances to our members when they make qualified lending activity. Moving over to our voluntary products, Banking on Business is our small business product that provides secondary, unsecured financing to small businesses in conjunction with financing from one of our member institutions to help bridge the gap between what a small business needs and what one of our member institutions is willing to lend. Within Bob, we also have a loan type called Bobby that is available to minority and women-owned small businesses. Home for Good provides grants to fund projects, programs, and activities that support those who are experiencing homelessness or at risk of homelessness, working with the existing homeless service provider network in each state within our district. Funding is offered annually by FHL Bank Pittsburgh in conjunction with the state housing finance agencies within our district. Blueprint Communities is a program that provides local leaders the tools to develop a long-term revitalization strategy for their communities. And lastly, in 2023, the Voluntary Housing Grant Initiative will provide $3 million of additional funding to address affordable housing needs in Delaware, Pennsylvania, and West Virginia in the form of grants for members teaming with developers to create affordable housing. This initiative is separate and distinct from our statutory AHP. I do want to note that these are the products as of the recording of this webinar. Our most up-to-date information on our community investment products can be found on our website, or you can reach out to your business development manager. Let's move on to CLP. CLP is a $2.6 billion revolving pool of advances available to FHL Bank members to fund qualified housing and community lending activity. These advances are discounted to FHL Bank's cost of funds and are typically 15 to 30 basis points below comparable rates. Any FHL Bank member may access the CLP advance pool if that member has or will be funding qualified lending activity. CLP advances are offered in a variety of loan term structures, including fixed rate loans up to 30 years. Members can view CLP advance rates through online banking. With CLP, there is a $50 million annual funding limit per member and a $150 million limit on total outstanding CLP advances per member at a time. Let's go over some benefits of CLP. As I mentioned earlier, CLP advances are at FHL Bank's cost of funds, so it allows you to access cheaper liquidity. The CLP loan pool is non-competitive and available year-round. Because CLP eligibility is based on the type of lending activity, there is no additional underwriting by FHL Bank. Once a CLP advance is qualified by the Community Investment Department, the advance is then treated like any other advance. What this means is that except in cases of job creation or job retention, there is no compliance monitoring or reporting. Once a member secures a CLP advance, the CLP loan can be used to match funds to mitigate interest rate risk. CLP loans, since they support qualified community activities, may qualify for CRA credit, and of course, using CLP supports community and economic development in your communities. The diagram on this slide helps to illustrate the cost savings benefit of CLP. In this example, we used a $5 million loan with a term of 10 years. The CLP rate reflects a discount of 20 basis points when compared with a standard FHL bank advance rate. Over the length of the 10-year term, there are savings of $100,000. In order to qualify for CLP, an eligible project must do two things. First, be an eligible type of lending, and second, fund eligible activity. The list on the left outlines the allowable lending types that are eligible under CLP. The first and most common is an originated loan. This includes loans that have not yet closed, as well as loans that have closed within the past 3 months. Participation loans also qualify, as well as mortgage revenue bonds, mortgage-backed securities, and the purchasing of low-income housing tax credits. On the right are the activities eligible. CLP can be used to fund loans that support housing and economic development projects. This includes affordable rental and homeownership housing, small business loans, infrastructure and utilities, schools, and municipal loans. The most common activities we see on CLP applications are homeownership portfolio loans, as well as rental housing and small business, both specific project and portfolio loans. So once you determine you have an eligible lending activity, a CLP application can be submitted using one of the following two formats. The first is a specific project loan, which is one single qualified loan. Members often use specific project loans to match funds and offer a better rate or term to their customer. Specific projects can be qualified based on any of the CLP allowable qualifiers. The second is a portfolio loan, which is when a member packages together multiple like loans originated by the member within the past 3 months and submits together as one CLP application. In the case of portfolio loans, members typically use the CLP advance to improve their liquidity. Portfolio loans are most often a collection of homeownership loans or small business loans. Before moving into the details of how a loan is qualified, I would like to share one example of how CLP can be used to benefit the member and borrower. In this case, an affordable housing developer was seeking a loan to cover renovations on 2 senior housing buildings. Both properties had existing HUD rental subsidies and therefore had good cash flow. However, the member could only extend a 5-year fixed rate loan. In order to give the long-time customer a better deal, the member applied for CLP. With the CLP application approved, the member booked in advance, matched terms, and extended a 20-year fixed rate loan to the project. The structure made the deal work for the affordable housing developer, and combined, the two projects provide 113 units of low-income senior housing and 10 units for individuals with disabilities. Next, we will cover how to identify qualified activity. Affordable housing is eligible as both rental and homeownership housing. For owner-occupied housing, eligible activities include loans for the purchase, construction, rehabilitation, refinancing, or pre-development financing of owner-occupied housing. The income of the household must be at or below 115% of the area median income for a 4-person household. The income limits on the HUD website is the tool we use to determine income limits. HUD income limits are updated on an annual basis. The next slide will show the HUD income table in detail, but I would like to note that links to all relevant websites can be found on the CLP qualifier guide. At the top of this slide shows a screenshot from the HUD website's income limits. Here, we have selected Allegheny County, Pennsylvania. Circled in blue is the median income, already adjusted for a 4-person household. This is the number we will use for our calculations. To calculate the maximum annual income, we simply multiply the median income by 1.15 to get 115% of the median income. In Allegheny County, for example, any household at or below $109,710 will qualify for CLP. This slide shows an example of what a homeownership portfolio looks like. If you would like to submit a CLP application with a portfolio of homeownership loans, you also need to fill out and submit this worksheet. In this example, a member is submitting an application for a $1 million portfolio loan made up of 6 homeownership loans. As you can see, basic information about each of the loans in the portfolio is required. We need the loan number, loan date, borrower's name, the amount of the loan, if the borrower was a first-time homebuyer, the borrower's annual income, and the address of the property purchased. This is an extremely simplified example with all of the loans purchasing homes in the same county. As we determined on the last slide, all of the households are below the limit for the county, and therefore all of the incomes in this portfolio will qualify for CLP. With portfolio loans, please keep in mind portfolios expire 3 months from the date of the oldest loan in the portfolio. In this case, the oldest loan in the portfolio was dated October 27th, 2022. Therefore, this portfolio would expire on January 27th, 2023. For a rental project, eligible activities include loans for the purchase, construction, refinance, or rehabilitation of rental housing occupied by and affordable to income-eligible renters. At least 51% of the units in the project must be affordable to households earning at or below 115% of the area median income for a 4-person household. Again, we use the HUD income limits to determine the maximum monthly rent. The top of this screen shows the same HUD income limits table for Allegheny County, Pennsylvania. To calculate the maximum monthly rent, we first have to calculate 115% of the area median income. Just like in the last calculation, we take the median income of $95,400 and multiply it by 1.15 again to get 115% of the area median income. And we get $109,710. We divide that number by 12 because there are 12 months in a year to get the maximum monthly income. Then find 30% of that maximum monthly income to account for the percentage which should be spent on rent. That number is $2,742.75, which is the maximum amount of rent that could be charged to a household at or below 115% of the area median income. Remember that to qualify a rental project, only 51% of the units in the project need to meet this rent standard. This slide shows an example rental worksheet. If you want to submit a CLP application for a rental housing project, you also need to fill out and submit this worksheet. Again, assuming this project is located in Allegheny County, we determined the maximum rent to qualify for CLP under the rental housing qualifier in Allegheny County was $2,742.75. This example includes a 15-unit multifamily building. There are 10 one-bedroom units and 5 two-bedroom units. A member loaned $500,000 to fund renovation work to the building, and in this case, all units are below the maximum rent, and therefore this project qualifies for CLP. Next, we will cover a variety of ways community and economic development loans can qualify. The most common of these is small business. To determine eligibility, we use the small business size standards as published by the Small Business Administration. The size limits are organized by NAICS code and qualify either by annual sales or number of employees. To qualify for CLP, a small business must be below the size standard for the NAICS code it identifies with. On the next slide, we will show some examples. Here is a screenshot of the SBA size standards. As you can see on this slide, all of the industries listed on this slide qualify by annual revenue. So for example, a limited service restaurant could earn up to $13.5 million per year and still be considered a small business. An automotive repair business can earn up to $9 million per year. This slide shows an example of industries that qualify by number of employees. So as you can see at the bottom, fresh fruit and vegetable merchant wholesalers can have up to 100 employees and be considered a small business. This slide shows an example of what a small business portfolio worksheet looks like. If you want to submit a CLP application with a portfolio of small business loans, you also need to fill out and submit this worksheet. In this example, a member is submitting an application for a $1.6 million small business portfolio. As you can see, basic information about each of the loans in the portfolio is required. We need the loan number, business name, type of business, NAICS code, annual revenue, number of employees, loan amount, loan date, and business address. Please note in this worksheet, revenue and loan amount are listed in the thousands. Again, this is an extremely simplified example with only 3 businesses in the portfolio. In the previous slides, we looked at the SBA size standards for each of the businesses in the example. Additionally, I've placed them on the bottom of this screen. So the first loan in the portfolio is to a wholesale produce business. This business has 20 employees. Its NAICS code qualifies by number of employees. The size standard for fresh fruit and vegetable merchant wholesalers is 100 employees. Therefore, this loan qualifies for CLP. The second loan is to a coffee shop. They are considered a limited service restaurant under the size standards. This loan would also qualify for CLP. The annual revenue for the business is $523,000, which is below the size standard of $13.5 million. The last loan is for an automotive repair shop, and this loan also qualifies for CLP. The annual revenue of the business is $1.5 million, which is well below the size standard of $9 million for general automotive repair businesses. Again, please keep in mind that this portfolio would expire 3 months from the date of the oldest loan in the portfolio. In this case, the coffee shop's loan is dated November 8th, 2022. Therefore, the portfolio would expire on February 8th, 2023. The next qualifier is census tract. In this case, any economic development project located in a census tract with a median income at or below 100% will qualify in an urban area, or up to 115% if the project is located in a rural area. Examples of economic development projects are listed on this slide. The census tract median income can be looked up on the Federal Financial Institutions Examination Council, or the FFIEC website, and urban and rural eligibility can be determined on the U.S. Census Bureau's website. First, here is a screenshot of the FFIEC's mapping system. In this example, I've used the address of a commercial business in Newcastle, Delaware. To look up income, you enter your address, click search, and then click census demographic data for more details. A window will pop up with additional information. The 6th line down will display tract median family income percentage. In this case, the percentage is below 100%, so the project would qualify regardless of whether or not the project is in a rural or urban location. However, if the percentage was above 100 but below 115%, the project would qualify only if it is considered rural. To determine if a project is in an urban or rural location, use the Census Bureau's Quick Facts. In the search bar, begin typing the name of the city and select the correct one. If the population is 25,000 or less, it is considered rural. If over 25,000, the project is considered urban. In our example, Newcastle, Delaware is rural. In this next qualifier, employees or beneficiaries of the project must be income qualified. If qualifying based on employment, at least 51% of the project's full-time employees must have an income at or below 100% in urban areas or 115% in rural areas. If qualifying based on beneficiaries, at least 51% of the families served by the project must meet the income guidelines. An example of a project that could qualify on the basis of a benefit to a household beneficiary could be the construction of a daycare center where 51% of the households that use the center have qualified incomes, or a nonprofit social service provider which serves low-income families. To determine income eligibility, the same HUD income limits and Census Bureau population lookup links can be used. Please note that CLP applications approved with the job creation or retention qualifier do have a monitoring requirement. Members are required to submit a job creation or retention certificate that includes a statistical summary of salaries of jobs created or retained within 12 months of booking a CLP advance. The last qualifier we will discuss today is a project located in a designated area. Any economic development project located in one of the areas with a designation listed on this slide will qualify. Please note that the CLP qualifier guide can be found on the CLP webpage. This document has links to the above designated areas, as well as links to the examples we've gone over in this webinar. Now that we've covered what is eligible for CLP, let's discuss the resources we have available and how to apply. This slide outlines how to apply for a CLP advance. First, a member participates in qualified lending and determines the need for CLP financing either before or up to 3 months after closing. Second, the member submits a CLP application plus supporting worksheet if necessary. If you are unsure which supporting worksheet to use, please refer to the CLP qualifier guide. On your first submittal, we are happy to walk you through the process to get you comfortable. When submitting CLP applications, please remember the member is responsible for underwriting the loan or loans and ensuring that all of the member's loan standards are met. The application for CLP funds is strictly to justify that the project, based on the qualifiers discussed in this presentation, is eligible for CLP funding. We do not underwrite your project. Next, the Community Investment Department reviews the CLP request to ensure that it meets one or more of the CLP qualifiers. CLP approvals are typically completed within 10 business days of the submission of a completed application. Please note that each CLP approval will be good for a maximum of 3 months. In the case of a specific project loan, which is already closed, or a portfolio of loans, the expiration date will be 3 months from the oldest loan in the portfolio. I would also like to note here that if your CLP approval expires on a weekend or an observed holiday, you must book your advance by the prior business day. We cannot extend CLP approvals, and they do not carry over to the following business day. Lastly, with a CLP approval, members need to call to book their advance. I'd now like to turn it over to Fred Duncan, Senior Manager of Business Development, to talk about the types of CLP advances you can book and how CLP rates compare to our other rates.
Thanks, Julie. The great thing about our CLP offerings is that it's very similar to our regular advance offerings. We offer fixed rate term loans from 3 months to 30 years, amortizing advances from 12 months to 10 years, and new for 2023, an adjustable rate advances linked to SOFR. What we found from traditional borrowers of CLP who submit pools of loans is they usually go with the fixed rate term. They submit a pool of loans and go right to a fixed rate term. Occasionally, we'll have a member who is booking a loan that, say, is maybe a little bit larger than what they're usually comfortable holding. So what they'll do is they'll come in and they'll do an amortizing loan with us to match those funds and kind of put it to the side and not have to worry about the funding of that loan going forward. And then finally, with the SOFR-based loans, or SOFR-based advances, with the rise in interest rates in 2022 and 2023, we felt it was important to be able to offer our members an opportunity to manage some of the interest rate risk of their portfolio by offering the SOFR-linked amortizing loans. Now, you can see here, every day we publish our advance rate. And In this example on this page is our fixed rate offerings. Starting from the left, you can see first column, these are fixed rate. Then we have the term. Then we have the dividend adjusted rate, which is the all-in cost after you receive the dividend from our activity stock. And then finally, the column that you can see the circle at the top is the CLP rate. So if we look on this sheet at, say, the 6-month term, we can see that the sheet rate for the 6-month term is 5.29. The all-in dividend adjusted rate is 5%. And then to the right, the CLP rate is also 5%. But what we don't show on this sheet, which is important to remember, is just like our regular advances, there is an activity stock purchase requirement, which would be 4% of the advance. Now, as of the printing of this rate sheet, our advance rate or our dividend rate was 7.25, which was worth 29 basis points. So when we look at these rates, we can see the sheet rate was 5.29, the dividend adjusted was 5%. But with CLP, we can take another 29 basis points off of that. So your all-in rate for that 6-month term would be 4.71. So when we compare that to the original sheet rate of 5.29, it's a very significant savings. For our amortizing rate sheet, we can see that it's a similar layout to the fixed rate. We have to the left, identifying that's amortizing, the term, the sheet rate, the dividend adjusted rate, and then finally the CLP rate. When the SOFR advances or the SOFR CLP advances are added to the rate sheet, we'll show the discount in the spread to SOFR. SOFR advances are the base rate of SOFR, which is the adjustable part, and then with the spread adjustment to that. And that's where we'll see the CLP adjustment is going to be on the spread. So you may be looking at these rates saying, wow, what should I be doing to start being able to utilize the CLP program? So because we can only go back 3 months for qualifying loans, the best suggestion that I can offer is to start talking with your loan operations folks to tag the loans that your group is booking today so that they're easily identifiable for you going forward when you need to pull those loans for a CLP credit. We have what I refer to as power users of the program. And what they've done is they're tagging their loans, and then they've had their IT group create a report that generates monthly for them that shows all the loans, all the qualifying loans that closed the month before. So that if in the event they have a borrowing need that they would like to utilize CLP for, they have those loans in hand ready to submit. For other suggestions or to hear maybe some other strategies that members may use, feel free to reach out to your business development manager, either Tom Westerlin, Vince Moy, or myself, Fred Duncan, and we'd be more than happy to sit down with you and talk you through. Thank you.
Thanks, Fred, for that great insight. So before we transition to resources, I wanted to cover a few common questions we receive from new CLP users. This first slide covers some common application questions. The first question we get a lot is, do I need to submit backup documentation for the loans included in my portfolio application? No. While you should still be checking to see if the loans qualify, we don't need any backup documentation at the time of application. The only required documents are the CLP application and the worksheet if applicable. While we do rely on your certification that the information submitted in your application is accurate, we do reserve the right to request more information if we deem necessary. The second question we get pretty frequently is, can I request an extension on my CLP approval? No. We cannot grant extensions because the expiration date determined at approval is based on a regulatory requirement. However, if you have a CLP approval for a loan that is not yet closed, you may resubmit under a new application. And the third question we get a lot is, what are the monitoring requirements once a CLP application is booked? If you are submitting under the job creation or retention qualifier, the member is required to submit a certification within 12 months of booking a CLP advance. There are no monitoring requirements for any other CLP qualifier. This second slide covers questions that are specific to advances. The first question we get a lot is, do I have to book in advance for the full amount of the CLP approval? No. You can book up to the amount of your approval, but you are not required to book in advance for the entire amount of your CLP approval. The second question we get pretty frequently is, can I book multiple advances with the CLP application? Yes, you can book multiple advances up to the amount of the CLP approval. We understand that members have different liquidity needs, and you can book as many advances as you'd like up to your approval amount. The third question we get a lot with advances is, do I need to book a CLP advance for the same term as the loan submitted in my application? No, you can book whatever CLP eligible term you'd like. All right, we will wrap up today's webinar with CLP resources. Here is a snapshot of a portion of the CLP qualifier guide that I mentioned earlier. Each method to qualify a CLP loan covered in this webinar is included in the qualifier guide. Please note that each activity has eligibility parameters, application forms needed, plus active hyperlinks to the relevant qualifying information. This document can be found on the CLP webpage. The FHL Bank webpage offers a wealth of information on CLP, and it is highly recommended you visit the webpage to review the available resources. This is a screenshot of the main CLP webpage. The red circle shows where the CLP forms and resources can be found. You can also find our CLP applications and worksheets on our website available for download. Finally, I would suggest the following steps if you think you have an activity that could qualify for CLP funding. With CLP, there's no need to enroll in the program. First, please review the CLP resources that are available on our website. Second, use the qualifiers guide and the CLP application to help you determine if your institution participates in qualified lending activity. If so, discuss internally whether the use of a CLP advance as a funding resource is an option. Third, take advantage of the technical assistance we offer. Either myself or your business development manager are always available to discuss CLP loan qualifications and would be happy to discuss projects with you and help you submit. Remember, CLP is open year-round and is non-competitive. My contact information can be found on this slide, as well as the CLP webpage. Please also feel free to reach out to Fred Banuelos or Megan Kreider, who are business development managers for community investment. And as Fred Duncan mentioned earlier, please also feel free to reach out to your primary business development manager. That's either Fred Duncan, Tom Westerlin, or Vince Moy. This concludes the CLP webinar. Thank you for your time.